Hi folks, and happy holidays. I'm Doug Hensley, president of Hertz Real Estate Services, and I'm coming to you today with our December 2025 Farmland Market Update. I hope all of you had a blessed Thanksgiving with those closest to you, and now as we approach the Christmas holiday, there's always a parallel busyness of year-end farm business and farmland-related activity. Specifically, lots of planning for 2026 operational details, as well as a good deal of real estate activity, both closings of sales that have already occurred and a number of sales still upcoming. Looking back on the year, we're closing 2025 with a stable land market. You'll probably remember we enjoyed a nice run higher in commodity prices this past January and February, which helped support stronger first quarter land sales. But once we got into the second quarter, the uncertainties brought on by the new administration and the rollout of the Trump tariffs really roiled the grain markets. And when you combine that injection of uncertainty with what more or less turned out to be a China boycott from buying U.S. soybeans and a relatively strong growing season for our major crops, the grain markets really sagged through most of the summer and throughout harvest. The weakness in commodities led to widespread profitability concerns for most of the year for row crop producers. However, in the land market, when we compare 2025 to other recent years, relatively few farms sold during the May, June, July, August timeframe, which greatly supported sale prices for those farms that did sell during that period. As I said at the time, demand for acquiring additional farmland was down this year, but supply was also down, so the marketplace was, for the most part, able to maintain a stable standing coming into harvest. Now, coming off harvest, we confirm that we generally grew a better soybean crop than we expected, and we also harvested a record 16 plus billion bushel U.S. corn crop, even though we had hoped for even more. In late November then, China dipped their toes back into the U.S. soybean market, which has boosted soybean prices close to $1 higher over the past month, and corn demand has also been very strong, which has helped to move corn prices off of their harvest season lows in October. The positive move higher in both commodities has not greatly expanded profit potential because margins were that upside down and are still near or slightly below break-even price levels for most operations. But the price movement has supported land sales the past 30 to 45 days, especially in neighborhoods that enjoyed above average yields this year. To be clear, there are no new land sale records being set this fall, but many land sale prices have been at, and in some cases even slightly higher than expectations for some close market watchers, including me, coming into the fall season. So I think we're closing the year with Midwest farmland values close to where we opened it. And farmland rents also seem to be mostly year over year stable going into 2026 as well. Amongst the roller coaster of a year we've had in so many other ways, and considering the financial pressures in places in the countryside after a third consecutive year of margin tightening for row crops, I think this speaks to both the underlying strength and desirability of farmland as an asset class. For land sellers, there's an ongoing opportunity to get a deal done. And for buyers with a long-term outlook, farmland is still a solid bet with clear upside potential. Here at Hertz, we have more than a dozen public auctions and sealed bid sales still on the calendar coming into early January. So as always, reach out to us if you have a question about one of the possible acquisitions or if you want to talk about the potential saleability of your farm. We'd love to have a chance to talk to you about your specific needs and how we could help you. This is my last update for 2025, so I hope you all have a very Merry Christmas season, and I'll be back with you in early 2026 with a market update the first week of February. Take care, folks.